So, hi everyone. I am here today, Thursday. Let's talk, and I have the beautiful Taylor Adams here. She is a mortgage lender, right? And every week I will have someone on here just to talk about the industry. And then sometimes also too, we may not have people talking about the industry of real estate, but this week I wanted us to get into a couple of things because a lot of people have been, how can we say, scared to buy.
Yeah.
Because the industry, the market is shifting. So I have the beautiful Taylor Adams here. She has been in the business for almost 3 years now, or over 3 years. And as you guys know, my name is Farrah. I am your favorite realtor. I help people buy, sell, and invest. I'm with Berkshire Hathaways. So if you're looking to buy or sell or invest, please call me. My information will be in the bio. So let's get into this interview with Miss Taylor here. So, Taylor, can you just tell us a little bit about yourself, your expertise, what you bring to the table? Let's just dive right in.
Yeah, let's do it. Well, one, I appreciate you inviting me to come talk and share a little bit about what I'm doing. It's not every day that everyone's excited to talk to a mortgage lender, especially right now. So I appreciate it and I'm so excited. But yeah, my name is Taylor Adams. I am a senior mortgage consultant with A&N Mortgage Services. We are based in Chicago, up in the Bucktown, Lincoln Park area, but we're licensed all over the country in many different states. I've been doing this for a little over 3 years now, and it wasn't a conventional path to mortgages. I don't think anybody wakes up and they're like, you know what I want to be when I grow up? A mortgage lender. So I was working in professional sports before this, down in Miami for the NFL, and then up here in Chicago with the NHL, and was just really kind of pulled into this. My mom has worked for A&N for 12 or 13 years. She's our underwriting manager. So I've been around our owner, Nina Vlamis, and a lot of the loan officers who are tenured there my whole life. And when COVID hit, it just was very fitting. Everybody needed help. It was fast paced and things were moving. So decided to hop on, get licensed, and the rest is history. And it's been such a blast and learning curve, and just such an honor to do what I do now for the past couple of years.
That is so cool. And you said you work with the NFL and NHL. That is like, that sounds like a cool job. I mean,
I'm on plan C right now with my life story. Okay. Plan A and B didn't work out. So we're on plan C.
oh my goodness. Because I mean, no offense to the mortgage lenders out there, but just coming from a background like that, and then you're like, you mortgage is like,
yeah, I'm doing mortgages. You know what's funny though is the difference of working in mortgages and then sports. You would think sports is I would enjoy that more, and while it has like the sexy factor and I have a lot of amazing perks and met a lot of amazing people and whatnot, I feel more fulfilled with mortgages. Believe it or not, real estate is just great. So I didn't think my life would take me here, but I'm so happy.
I mean, you make it look fun though. I follow you on Instagram and social media. So, with the outfits, and you walk into the office, you make, this job seems more bougie.
I try.
I'm looking at the teachers now compared to the teachers we had. I was like, these teachers didn't look like this
right.
15, 20 years ago. So, your life, and guys, I mean, she looks young, but she's young and she has like accomplished so much. Like, just this is not my first time actually speaking with Taylor. So just to hear her talk, you guys, is just amazing. She's very professional. She's very on top of her game. She knows what she's talking about. So, I just love to really get the back end of the story. So, can you share a significant achievement or milestone in your career? I know you said that you came into this business around the pandemic, but what was some of the things that you was like, man, I mean, I can't believe I just did this?
Yeah, so I think like anyone in real estate who's like a realtor or a lender understands the idea of being commission only and really having to build your business from bottom up. And that's something that a lot of my friends don't understand, and a lot of industries don't get. It's very much corporate, salary plus commission, just salary. And so going into this industry, I had spent my first year on a team with a salary. And after about a year, it was kind of that turning point of I really want to go out and build my own business and work with my own people and build my name and talk to my clients. And to do that, I have to go off on my own, right? Which is that leap of faith of I'm going commission only and I have to go find deals. I'm not putting food on the table if I'm not closing deals. So I think the achievement that I had was taking that leap of faith and going commission only. And in my first year of being commission only and an originator on my own, I did just under 10 million. And, you know, statistically speaking, I don't know what that looks like, but for me, it's really less about the competition against others and just such an exciting experience and feeling to know that I was able to provide for myself truly from just building my network, connections, speaking with people, and being as authentic as I can to really do business and make a name for myself.
I love that. And one of my best quotes is, you know, I'm not worrying about what other people do. I am, you know, in competition with myself. So
Absolutely.
if I did better last year, I'm happy for it. You get what I'm saying? So everyone that's tuning into this interview, all her information will be in the bio. So if you're looking for a lender that you can trust, that's going to really put you in the house you want to be in, all her info will be in the bio down here. Now let's get into this market, girl.
Yeah, let's you know what?
Let's get into this market.
Let's just call it as it is, right? Because
yes. Now, as a real estate agent, right? I have a lot of people that want to buy. And are, you know, I have a few that's first time home buyers, and it's just a struggle, right? With interest being so high, you know, the type of house or in the mortgage and everything they're trying to get, they're unable to get it. So when you hear about people wanting to buy, and I still tell people to this day too, it's like rent is super high too. So it's like, do you want to
absolutely
rent and give it back to yourself, or you want to keep paying somebody else's, you know, mortgage? So with those questions, I know you get it all the time. Is it a good time to buy right now?
You know, I love this question. And I think there's so much I guess noise around this question when it's very simple. It comes down to the individual person.
Yeah.
Right. Of course, do I think that buying compared to renting is a better investment? Of course, you're either paying your mortgage or you're paying someone else's mortgage. And it, you know, it doesn't take a genius to understand that. That being said, buying isn't for everyone. Buying right now isn't for everyone. Buying in 5 years isn't for everyone. But in some cases, buying is right now for people with interest rates being high. And so what I've really learned and explained to people that I talk to that are very much on the fence or really just don't understand the process is that it comes down to what your goals are, you know, do you see the value in buying, right? Because if someone doesn't see the value in buying, there's no point in having that conversation. So I really kind of pulled it back when I'm talking to people and ask them, what do you want to know about buying? Do you see the value in it? And breaking down what their goals are in purchasing a property and explaining to them the process and the pros and cons to make that decision. So it was a long-winded answer, but I really think it's curated to each individual person, and that's what this market is in a good or bad market.
Right. And I get that. And I love your answer. Like it makes sense because we have so many people out here that's like, okay, I'm renting and my rent is almost $2,200. You know, right there, you could think about it like, you know, that's around maybe almost a little bit over a $200,000 house, you know, but also too, $200,000 can get you a lot these days either, you know, and you know, I'm really reaching out to people that don't have a mortgage and it's, you know, and or like a really high sales score, right? But then when I talk to them, it's like, well, where I'm gonna live because it's not no inventory out here,
right?
So
right. And the people that currently bought in 2020 or 2021 are sitting on a 3 or 4% interest rate. They, even if they wanted to get the money for their house right now and sell, even if they go buy and they do find something, their payment is going to be, you know, $700 to $1,500 more, even at the same price they bought at. And that's hard to convince people. I wouldn't want to do it.
Yeah.
Transparently speaking, like I get it. And I don't hide behind the fact that rates are high. They are. They keep getting hiked, and we kind of assumed that was going to happen, but it really does make a difference in what people qualify for. And the media is not also good at calming people down or making people feel secure that it's still a good time to invest or buy. But yeah, without inventory, with high rates and those two factors, it's a lot.
Yeah. Now it's another misconstrued perception that people feel like with a conventional loan they have to put down 20%. Now can we just walk through that just briefly about down payments, and just letting people know like how much they need to save, because again, I want people to watch this and kind of get some information if they are thinking about buying, right?
Yeah.
And actually, bring you some business in. Me too.
Yeah, I'm here for it. I love it.
But I have a lot of people like, I don't know where to start. And, I tell them all the time to talk to me. I will get you in touch with a lender. But just briefly, talk about, these different loans, right? And how it is possible for you guys to get a 3% conventional loan.
Yeah, so I think it's something that's very overlooked, and it seems extremely obvious that you don't need to put 20% down, but people really don't know that. And what does even 20% down mean? Is it loan amount? Is it sales price? Is it if you have a certain credit score? And so the way that I explain to people is when we're talking about down payment, if you are a first time buyer on a conventional loan, you can go as low as 3% down. Now, when I'm talking about down payments, I like to make sure that I include, because a lot of videos will say, you only need 3.5% down on an FHA loan to get into this house. But what tends to be ignored or forgotten about is the closing cost, right? So if somebody says, I don't have 20% down, and I said, okay, you could put 3% down, and let's say that 3% is $10,000, you cannot forget about the closing costs that you're going to have to pay in addition to the down payment. So that's something that I talk about with first time buyers, especially is everything all in what they're going to be expected to pay. But speaking just about down payment, yes, as a first time buyer on a conventional loan, you can go as low as 3% down. And then on an FHA loan, you can go as low as 3.5% down.
Yes. And just for people that's VA, what's the lowest about, I know what's the lowest for that one? I think
VA is a 0% down.
0%, right? Mm-hmm. Okay, and they can get up to 4%, right, in a credit. Correct. Okay, so just want to make sure we do let you guys know that. And for FHA, I believe is 3%, and FHA is 6.5 still, correct?
6.
So for those that need help with closing costs, she can help you out with that too. Now let's get into these grants. Are there any grants right now for people that is looking to buy for the first time, or even maybe invest in properties or anything like that in the Chicagoland and DuPage, Will County area?
Yeah, so we do have a grant, a $6,000 grant that goes towards your down payment and closing costs. There are some income limits and purchase price limits, but if you qualify, it's a great program. It's a forgivable loan. So what it means is you get $6,000 to go towards your down payment closing costs. The rate is typically a little bit below market. And as long as you stay in the property for every month you stay in the property and you don't sell or refinance, $50 comes off of what you'd owe back if you do sell or refinance. Okay. But it's a great way for first-time buyers or buyers that want to use that program to get in and not have to bring as much to the closing table.
Yes. And, I just for people that's watching, what are some of the qualifications so they could probably start getting, on top of this before the spring market hits?
What are the qualifications they need?
So, to get the $6,000 grant.
Yes, so it is going to be depending. They do conventional, they do FHA, and they do VA loans. Purchase price, I believe they just increased to, I have to double check on that so I can get all the information for you to put in the captions. It was at $350. I know they increased it. They do a max debt to income ratio of 50% now, I believe. These all get changed sporadically, so I want to make sure I'm quoting correctly. And then income wise, it's in Cook County, it was 125,000, and I want to make sure that's correct too. So I will get all the information and I can send it to you so you can post it.
Yeah, and again, if you guys want to talk to her a little bit more, please, all her information is in the in the caption below. So while we talking about grants, let's flip it a little bit, because I have a lot of people that's looking to invest, right?
Mm-hmm.
It's a two-part question, because a lot of people feel like the market is going to crash. Everybody keeps saying this, the market's going to crash and all this and the other.
Market's going to crash, right? Yeah, they've been saying that for 2 years.
So with that being said, I know, a couple years ago, a lot of people wanted to invest in properties and different things like that when interest rates were low. But interest rates are pretty high right now. Do you see it's a good time to invest in properties right now? Just because so many people want to rent, so it's giving them opportunity to get their money back? Or do you think you feel like they should maybe wait a little bit longer? How do you feel about, investment properties?
Yeah, it depends. I mean, you have people wanting to do short-term rentals like Airbnb, and that's kind of has its own
Right
debate going on right now on what the future is for VRBO and Airbnb. And then on the long-term rental side, the problem is that you run into is on a conventional loan right now, you're looking at a minimum 25% down payment.
Oh, wow.
With that, you also have a higher rate because it's an investment property. And with a higher rate comes a higher payment. So it's really finding the perfect property that one, you can put 25% down, but also with whatever your mortgage, taxes, insurance is going to be, HOAs, you're going to be able to cover that with a rent. So people that are expecting to kind of get fast cash or immediately start positive cash flowing, it's a little bit tougher to do, especially when you get into the multi-unit space, which is big in Chicago and surrounding areas. It's really hard to get that covered. That being said, there's not a ton of buyers out there, right? Yeah. So the competition's a little bit less, but the competition is also there for people that are trying to buy as investment properties or primaries as well. You have multiple offer situations. So I think from a mortgage perspective, it's more a numbers game, and it depends if you're, it's a numbers game. But from, and your perspective, I mean, are you seeing a ton of investors come through and buying all cash? Are they financing, or are they like, I want nothing to do with this market until rates drop?
So right now, we still have people out here that's looking to invest, right? But also too, with the whole financing thing, also, like, let's just say people that want to flip. It's the hardest thing ever. And that interest is sky high because they think you're going to sell it fast. I had a situation where the house was on the market for a year, even though, and that's why I'm trying to let people know, like, the market is normalizing right now. So you have to put in a little bit more work, people. Right. Okay? So it's not just you put it on the market and it's going to sell. Sometimes people are waiting because interest is pretty high right now. But if you're an investor, and this is some of the things I have to talk to them about, you got to have that money in the bank. If something like this happens where you thinking that your house is going to be flip all this in 6 months, so put in all your bills, your utility bills, your mortgage and everything, and you think it's 6 months, but end up turning to 18 months. Did you have that full extra year in your bank account? And a lot of people, because they're getting these and please quote me if I'm wrong, these loans where the interest is like outrageous, or those loans where they have to wait till certain things are fixed. What's the
so it depends, right? Like I think flips for me are kind of one of those things I don't do, right? Because we can't be buying, selling loans within that short of amount of time. But I imagine those investors are going to hard money loans, and you're going to see that way above market rates, right? You're going to see 10, 11, 12%, depending on the size of the property, the loan, all of that, which is just it's absurd, right? It's crazy. And if you don't have the reserves to back that up, if something doesn't sell or if something doesn't go according to plan, it's on you, which is why, we talk about, people are like, the market's going to crash. Well, there's so much on the loans that we do, there's so much income verification and reserve verification that we go through that this is why we have guidelines, is to make sure that the loans are protected, the borrowers have the money to pay the loan. And that's how it's been a little bit different from 2008. And I actually watched The Big Short last night for the first time. I don't know how it was my first time, but such a good movie. So anyone interested in the 2008 crash, definitely watch. It was great.
Yeah, and what you say it was again, just for the
The
people,
Big Short.
The Big Short. So I'm gonna go put that on. And you
It's
said
good. It's on Netflix. I did not
it's on
know.
Netflix. So now I'm gonna go put it on my wish list instead.
Yeah.
So
Yeah.
um now just a couple, I mean, I can definitely tell these people as well, but we want to hear from the expert. So what are like the top three things people should come to the table with when they want to, or if they're ready to start buying a house, or they looking for an investment for rentals and different things like that? I know that's a two-part question because you need both for different.
Sure.
But what do you can you just let the people know, like, okay, these are the three things I will need to see before I can really help you get into a place?
Credit, income, and assets. Those are the three things. Credit, income, and assets. Those are the three things that I ask for. I always do an initial conversation, and it's kind of like, what are you thinking? What's your timeline? But if you want a true pre-approval and you really want to know to the dollar what you're pre-approved for, it's going to be pulling your credit, which sounds scarier than it is, because even when you apply for a rental, you got to get credit pulled.
Yes.
It's your income and making sure you're employed, and if it's a little bit more unique than just a W-2 salary job, we're calculating that correctly. And then your assets, you got to have the money to pay for the house, you got to have the money for the down payment, the closing costs. And when I can take a look at those three things, I can really give you an idea of what payments are going to look like, and what loan products you should be using.
Now I know credit, like you said, is so scary to a lot of people, and they're so nervous. I talk to people all the time and they're like, oh yeah, I don't think I could buy it right now because my credit score is in the six. Can you please let these people know, like, hey, your credit score needs to be about right here to get the grants and different things like that. At a minimum, I can help you buy a house. So the people that's in the six, they won't feel like I can't buy, I'm gonna have to rent for the rest of my life. Where do you want them to be at, Taylor?
Yeah. So I'm going to be a little bit of a good cop, bad cop kind of situation,
Okay.
right? Because the better your credit, definitely the better
Yes.
your interest rate, the more loan products you're going to qualify for. Now, if you have less good credit, I'll call it, it doesn't mean that homeownership is not on the cards for you. There's definitely programs, FHA. That's why a lot of people use FHA loans, is because they advocate for borrowers with lower credit scores. But what I think is also something to think about, if you're watching this, I've never really thought about my credit. I really don't know where my credit is, because when you look on Credit Karma or Chase Credit Journey, those could not be accurate. There could be things in your credit reports you don't see. So talking to a lender as early as 1, 2, 3 years out from buying, that's when you're really going to see, hey, this is where I'm at. This is what I need to do to get my credit up. We can't give you really, official legal advice because we're not credit experts, but we can encourage you that there are things to do to help your credit if you don't qualify. But that being said, you don't need an 800 score or a 780 score to get into a home, right? Like I've had someone with a 650 score, 620 score. In this market, it's a little bit harder just because every loan is considered a little bit more risky right now. But FHA allows for as low as 580. And it really just depends, especially if you have the money and the income to do it as well. It's just a credit thing. We can get around it, but that's why talking to a lender as early as possible and getting in and having those conversations early on is so important.
Yes. Okay, people. Now we got into the back end of loans, mortgages, and different things like that. I appreciate Taylor walking us through this because, as a real estate agent, I am not an expert.
Right.
So I call
not
her.
your job, though. Not your job to be the expert.
I put your team together. So I'm the coach, and I put the whole team together to go out there, hit the ball, make them dunks for you. Okay.
Exactly.
Oh, that's why I call Taylor when I have questions. Okay.
Yes.
So next is for the people, real quick, we're gonna dive in just to a couple more questions. These are for people that are thinking about becoming lenders, right? And what is the steps and what advice can you give someone that's thinking about they want to come into this type of industry? Like you said, you started off with a salary, then you decide to go completely commission. You're doing amazing, but the market is shifting, and I was doing amazing a few years ago too. I'm still doing good though, and I know
you're always killing it. You're always
still out here working. We're just
Yes.
working harder than what we did a few years ago.
Yes.
So, but with that being said, what are some of the tips that you would give someone that's thinking about becoming a lender?
Yeah. So the process to become a loan officer is pretty simple. It's a 20-hour education course and you take a licensing test. I failed the test the first time. I'm not gonna lie, I'm not a good test taker. It's really, you know, just like the real estate exam, it's a lot of information and you really just gotta study. So once you get past that, you get tested and you pass. Pretty straightforward from there. You'd go and you'd find a company to work for, which if any loan officers want to come work for A&N, you just let me know. I think this job, I'll be just excruciatingly honest. It is a constant, for lack of better terms, just a roller coaster. It really is. And in the best and worst way possible. There are days where I wake up, I'm like, I'm not good at my job. I can't do this anymore. I can't do it. And there are days I'm like, why does everybody do this? I'm like, I'm top of the world. I'm doing great, right? I don't have to worry. And I think you need to be really resilient. You have to have a lot of faith in yourself. You need to be willing to work harder than anybody else. I mean, this job is truly based, and the people that come out on top of the people that work are you know, working hour after hour more than their competition. And that's not to say that you shouldn't have balance, because you absolutely should. Otherwise you'll go crazy. But you're only as good as your last loan. And I think that people who really are driven in the success of their own business and building a brand, it's really hard, but it's really rewarding. And I have found such a passion for this job that's come out not only on the loan side, but I've been able to build a brand around other things that I love, like sharing my singing and sharing working out and just who I am and my family and friends and what I like to do outside of work with my followers. And it's become an entire brand for me, which I could have never expected mortgages to do. So while it's really hard and it's a very grueling job, it is also so rewarding, so fun. And I've gotten to meet so many amazing people along the way. And I really don't see myself doing anything else for the rest of my life. So it's truly.
I love that. Yes, she is a brand, you guys. She is a brand. I follow her. Her Instagram be blowing up. Okay. I try to help my workouts.
I've seen a few sponsorships while loans are slow, just a few to get me by.
Right. And you know, I tried to do some of the workouts, it just didn't work out as much. But I love that. I love that. So as you know, I mean, being a mortgage lender is just a lot of work. So I love that you just, you know, you bring it all together as I really feel like social media really help people like you, myself, really build this brand, right? Because you know, they look at it and they may think it's boring, but you know, $1 million listings and you know, your Instagram, it makes it look so much cooler. So for anyone that's thinking about doing it and just want to take a leap of faith and want to find something rewarding, again, please contact Taylor. She will help you guys out with that. So we're almost up with our call, but I like to shoot out questions to anybody I'm interviewing, just like so we can know a little bit about you. Okay, so I'm just shoot these questions out. First thing that pop up to your head, answer it. Okay.
Bill,
what's your favorite color?
Black.
I
know. It is. I'm not a color person. I'm not.
Oh, you're not? Okay. Because it is Halloween.
So okay, if I have to pick a color, probably orange.
I never saw you in an orange dress before, and you look big.
I do like orange. Thank you.
What are some of the books you're reading right now?
I'm going to be honest. I'm more of a podcast listener. That I can't focus on a book, but what I will say
what podcast then?
Oh gosh, they're all very much like goofy podcasts. Like I listen to a lot of the Barstool podcasts. I listen to Dave Ramsey because I think it's so interesting. The like money guru.
Yes,
I love to hear those scenarios. I've been listening to, what else have I been listening to? A couple of my like favorite YouTubers, some of those like pop culture ones. But if I were to recommend a book, it is called The Power of Moments, and I'm forgetting the author right now, but it's called The Power of Moments. It's a blue book and it's incredible. And I would really recommend it.
But when she sent me that, you guys, I'm gonna put it in the caption. Friday night, are you in or you out?
In.
Okay, you're homebody.
Recently out, but in by choice, yes.
What is one of your favorite foods?
Buffalo chicken wrap or a cheeseburger and fries.
Okay, easy. Somebody can definitely make that.
Yes, bar food.
Bar food, right? Favorite movie?
Step Brothers or 21 Jump Street.
Okay, comedy all the way. I see. I swear I thought you would have been a romantic girl, but
Oh my
now
gosh, no.
talking
My
to
friend made me watch The Notebook for the first time last year, and I was like, why do people, I can't, I've been getting into rom-coms. I just watched No Strings Attached, Friends with Benefits, what was the other one with Adam Sandler. I've been getting into some like rom-coms, but I'm very much a comedy girl when it comes to movies.
I'm gonna need you not to get on Notebook like that. That is like in my top
10. I
10.
know everyone gets so mad at me. I just can't, like, it's such a sweet movie. Don't get me wrong.
Yeah.
I just can't. I'm not a
Hey,
romance.
so you're not a crier then. So you don't. So when
No, I will. That's the problem is I can't take that emotion. I for
Oh.
sure cried. At the end, the end of The Notebook killed me. I was so sad.
Yeah.
I was like, why would you show me this movie? So it was a sweet movie, just not my go-to.
Okay. Listen, I love The Notebook. Definitely in my top 10. We ain't gonna go through my 10 because I'm all over the place. Definitely in my top 10. Okay. Tea or coffee?
Coffee.
My girl. So while we wrap this up, Taylor, do you have any last words you would like to tell your viewers? Please tell us your social media. Any last little tips you would like to give us?
Yeah, well, one, again, I appreciate you bringing me on. This is the kind of stuff that really, one, helps set the tone for this next generation and when the market comes back, who's going to be really here. And so I appreciate you allowing me to kind of speak what's going on in the market. I'm by no means better than every loan officer out there, but at the same time, I think it's really important to share as much information to let people know kind of what's going on. My Instagram and my TikTok are both Lend with Taylor Adams, pretty simple. And I would just encourage anyone who's in this industry, who's currently buying, looking to buy, that you work with someone that you like and trust. That's really what I built my business around, is making sure that I'm as authentic and real online. And I struggle with my job every day, just like everyone else does. I struggle with other stuff, but at the same time, I'm really confident that, I can work really well with almost anyone and bring them to home ownership. And I'm really, really thankful, honestly, to do what I do. So, if you can stick it out for a few more months and keep hustling, I promise, for both buyers, sellers, investors, and anyone working in the industry, it's going to come back and it's going to be well worth it.
Yes. So you hear it first, Miss Taylor Adams. If you're looking to buy or sell, I know if you live in the Chicagoland area, it's about to get cold, but the spring is right around the corner.
So get yourself ready in the winter.
Right. Get yourself ready in the winter. So if you're looking to buy or invest this winter, this is like the best time to really do it, especially investors, because we can help you right now, and then we can help you find renters with me to help you find renters next year, and she's going to get you in that place. So all her information will be in the bio. Thank you again, Taylor, so much. I really, really, really appreciate you and all you do for real estate agents like me, and helping with, women's council and different things like that. You are a breath of fresh air, and
thank you.
I appreciate you. So
thank you so much. I am so excited and appreciate it again. So looking forward to all that's to come for you and I moving forward.
Yes. Thank you. You have a wonderful night.
Bye.
Bye.